Welcome to the Capital Spreads weekly update. Today is Friday the 6th of May 2011 and it's been a very bad week for equity markets, also commodity markets have been really the main cause for this correction, and it's nothing more than that. There doesn't seem to be any major geopolitical reason, major fundamental financial reasons such as sovereign debt crisis or banking crisis or anything like that. It's purely the risk aversion, the severe correction we've seen in commodity markets that is also driving equity markets lower. So at the moment we're seeing the FTSE well below 6,000, it's around 58.85, the Dow at 12,630. And that has meant that the dollar has made quite a bit of a recovery against quite a few currencies. So the euro dollar is at 145.20, cable at 163.80. And of course the commodities that have suffered quite a bit, it's mainly silver, of course, but gold is well below 1,500, it's back to 1,480. And Brent crude has really suffered quite severely too. It's at around 107 dollars a barrel. So the failure to take out the highs for the FTSE is a little bit of a concern for the bulls, and I've got a chart here which shows that obviously the uptrend still certainly remains intact, or it seemed to be intact. And the concern though, however, is this double, if not triple top that has been formed around the 6,100 to 6,130 area. That's key resistance for the FTSE. So many failures at that level is causing the bears to come out, sell the market, also compounded by this weakness in commodities. So how are clients trading at the moment? Well, interestingly, they're short the S&P, so maybe they feel that US markets have a bit further to go, but have been picking up the FTSE. Interestingly, not picking up the FTSE as much as we would expect. In the past, during recent retracements, clients have gone quite aggressively long the FTSE, but not this time round, so a bit of tentative buying. They've been short the euro dollar, but now very much flat in euro dollar. Had a very good run. Obviously the weakness, the rejection of the 1.49 area has been very lucrative for clients who've been short euro dollar, but now very much flat, and on the whole they're long sterling. As regards gold and silver, very much had their fingers burnt in silver, and they've been picking up a bit of silver, but again keep on getting stocked out as it continues its weakness. And they're long crude as well, again struggling to find the bottom in crude. So for the rest of the week, what do we have in store? Well, today, obviously, the final day of this week, it's the non-farm payroll that we'll be focusing on. That is expected to come in around between 185 and 195,000. So again, shows that the labour market in the US is very robust, it's healthy, it's creating jobs. So really it would seem that in order to get more interest from the bulls, and to get people buying back into equities, we would have to see a much better than expected number from the non-farm payroll this afternoon. But that's certainly the highlight for today. The theme this week, well, it has to be this commodity correction. Have we got further to go? Silver has fallen over 20%, some 25-30% from its highs. And of course that indicates in many markets, if any market that falls over 20%, that tends to indicate that it has entered a new bear market. Things are slightly different for silver. The correction has been very much down to the fact that the CME has increased margin requirements. That has caused the mass sell-off, and of course silver being such a speculative commodity, it's possible that this may not be the beginning of a new bear market for commodity prices. So we'll have to wait and see. That's it for this week. As ever, do give us feedback, media@capitalspreads.com.